Right, so this session then is intended to put a little bit of meat on the bones, and I didn't want these guys here to have to kind of say, oh yes, there are 4 labels. I wanted to have covered that before. So let's start by then asking everyone to perhaps introduce themselves. So.
Yeah, great. I'm Therese Niklasson. I head up sustainable investment at Newton Investment Management, one of the boutiques under the BNY Investments family.
Thank you.
Hello, I'm Caroline Langley. I work at Quilter Cheviot. I co-manage 2 funds, the Climate Assets Balanced Fund, which has been running for nearly 15 years, and the Climate Assets Growth Fund, which came into existence a couple of years ago, as well as, probably in sort of contrast to some of my peers here, I also run private client discretionary portfolios with sustainable mandates.
Good morning, everyone. My name is Beloe. I'm a partner and head of research at WHEB Asset Management, and I'm on our impact investment team, which runs a number of strategies, including the FP-WHEB Sustainability Impact Fund, recently renamed. So that's me.
And my name is David Harrison. I work at Rathbones Asset Management, and I'm the fund manager on the Rathbone Greenbank Global Sustainability Fund, which has been running since 2018.
Thank you very much. I'm going to ask you all the same question to start with, because you're all in different businesses, but if you could focus on what's perhaps more relevant to your business and your day role. Can we start off by just giving people a flavour of how SDR and the rule changes has impacted your businesses? Would you like to start first?
It's been a really big project for Newton. We had quite a few funds that we started working on. I would say, though, that for the last couple of years, we had naturally been working on tightening up the framework, being more prescriptive, partially because we were pushing more and more of this work into the investment team. So moving from that world where we sort of said, well, we know it when we see it, but that was because there was an expert in the sustainability team or the responsible investment team kind of making a lot of those judgment calls, to now realizing that obviously we need to be very consistent and clear in how we assess this. But sustainability isn't one thing. I mean, we all know this in this room. It's not a linear exercise. It can't be easily reduced down to numbers and figures and ways to assess it. But I think we were in pretty good shape when this all kicked off, because we had anticipated and starting doing this framework work. That's not to say that there wasn't a whole lot of more kind of tightening of things that needed to happen. And that was very tricky, right? Because I think if you are an asset manager that sort of embraces this idea that sustainability can be many different things, and you embrace that because it's good for diversification in your funds, etc., you didn't want to lose that, so you want to protect your flexibility. So I think we are in pretty good shape, but we're obviously it's been a tough year.
Yes.
I'm going to take SDR in a sort of more holistic sense in answering this question. In terms of, in a sense, the first challenge, and that's the sort of anti-greenwashing element that is the first task. Now, everything we've done is always trying to be as clear, fair, transparent, treating customers fairly, etc. But there is always, when you go in through the literature and you see these sort of the unintended consequences of language change. So the example I'm going to give here is for the private clients. They are asked, as well as their risk preferences when they walk through their door, they're asked about their responsible investment preferences. And about 5 years ago, we devised 3 categories for this: aware, focused, and dedicated. So a lot of what we've been doing is changing the name, as it were, kind of getting rid of focused, because focused is now what we're applying the label for our dedicated strategy. The climate asset funds and the private client portfolios that run along that, they're aligned with the dedicated. And obviously it would be very misleading to have this sort of middle category named focused. So a lot of literature changes turning that into a new category called engaged. So it's not greenwashing in the sense that there are trees where they shouldn't be or misleading claims. It's just the language has evolved, and to be clear and not misleading to advisors and to clients, we need to change alongside it.
So we had the same problem on Fund Eco Market, because I remember showing Mark Manning at the FCA labels, that the SRI styles that we had, and he looked at the sustainability-focused one and went, oh, I like that. It's like, okay, right, so I've lost the ability to use that one. It's now trademarked. But yeah, I mean, these things happen. We're having to all be more careful, aren't we now? Seb?
Yeah, so for us, I guess it's been also, like the others, it's been a big project this year for the whole business. I think in terms of how it's impacted, when I think about how it's impacted our strategy, maybe first, we've now got the label and have published our prospectus, and I think we feel like, although we're very clear that the investment process itself hasn't changed, and I can talk a little bit more about why that's the case, but what we have had to do is be much clearer, much more precise in the way that we use language, as others have said. Be very clear about what we do and how that links back to the sustainability objective that we've set. Be much more rigorous in the way that we connect the work that we do with that objective. So I think that's all been very good, actually, very helpful. It was perhaps painful in the process, but it's been a helpful provocation from the FCA in terms of really pushing for the clarity. I think for the business, I think the jury's still out. We're still very early in this process. Obviously, we got the label at the end of September. I think a lot of our clients see that as validation, really. I think they probably expected us to get the label. And it was sort of confirmation, which was very helpful. I don't think, though, we've got to a point where the market really knows quite what it's going to do with the labels. There aren't enough of them yet. It's not clear how that's going to translate down into the discretionary portfolio managers. So we're still very much in wait and see mode, I think, in terms of what it means really for the business. One of the other things I wanted to mention is, we as a business, we have a mission to advance sustainability and create prosperity through positive impact investing. And we are genuinely keen to support the movement around sustainable investing. And to support our peers in also, who are doing an authentic, high-quality job to get the label. We need more labels. And so we've been very pleased to be able to share our experience, including like today, with our peers. And we held a webinar a week ago or 2 weeks ago, which was explicitly for our peers to also listen to what we've done. So I think big impact in terms of how the fund is communicated and how we frame it. We hope a big positive impact on the business as a whole, but that's to be seen.
Cool.
Yeah, maybe I'll start with maybe where we've not changed, which I think others have touched on this, is really our philosophy or process. I think that's very important that everyone in the room knows Greenbank, but the heritage. There's a lot going on in the short term, but I think you can't step away from the process and the philosophy, and that has been core to our thinking. I'd echo what others have said, really. It's about clarity of message, so going through all the documentation, whether it be imagery, language. We give quite a lot of transparency as part of how we communicate with investors anyway, but really making sure there's no misunderstanding around the terminology. So that's been a very helpful thing. It's been very complex, involving, as others have been through. But I think that the really pleasing thing is that you kick the tires. I think your process again and philosophy, you see how robust it is, which is something that we've been through.
Thank you. Brilliant. One thing just occurred to me that I hadn't said a moment ago. Whilst these guys are talking, and indeed the next panel session, if you could just be thinking of questions to ask Sasha for when he's here in, I think, an hour and a half, something like that. We've got Post-it notes around. Slido feels like a bit too much technology for me, so I'm on Post-it notes. So just help yourself to a couple. Give the Post-it notes to our team, or hand them to me, or also if you've got ideas of things you'd like to see on the Scriberia board, hopefully we can all use that after the event, because Dom's doing a fab job there capturing what we're saying. And if you've got things that you think this message is really important, that should go on there, please go and talk to Dom. Give him a Post-it note for some words that you'd like to see on there. So let's keep this as a real exchange of ideas and keep it personal, keep it real. Thank you. So back then, let's come back to SDR and the process, because it's been a bit bruising, hasn't it? But most fund managers I've spoken to have said there are some bits about it that they quite like. The FCA's made some useful comments, but a lot of the time it's been probably harder than it should be. But so perhaps if we could start off, I'll start with you again, Therese, if I may, talk about process. And then Seb, I'll come to you last, so you can then talk about how you got to where you are.
Yeah, so the process has been interesting. I mean, there's obviously been quite a few back and forwards with the regulator, which...
So you've put in for a label, have you?
Yes, we're in, and we've had some of those engagements. And I think the experience at times has been that it's been hard to see the goalpost, because we have thought that we have addressed an issue, and then we've come back and it's not been solved, and it's almost like you've been getting an answer, well, this isn't quite right, but we can't tell you what's right. And so there's been a bit of a fog, for sure, to sort of hit the mark, which has been tricky. And then obviously with things like the details that we need to put into prospectuses, etc., whilst at the same time bearing in mind that you need to keep this simple, right? Bearing in mind that it's a retail customer that you're trying to explain things to. And I think, you know, in our experience, a lot of our engagements over the years have probably been with quite sophisticated institutional investors, and therefore trying to do both things has been a tricky thing to get right. So, yeah. Yeah.
And it is, the markets are very different, and I spent years sitting with fund managers who are mainly selling to institutions, and I was trying to communicate stuff to clients, and the number of, I mean, this goes back 20 years, 15 years, but, you know, the language is different, and the way you think has got to be different. So I think that's a bit of a curve that people had to go through. Please, Caroline. Process.
So as far as our investment process, it hasn't changed. As far as where we are in that process, we've had the pre-application talks with the FCA. We've put in our applications for the sustainability focus labels for both funds. We're in the process of engaging with them. I echo some of the sentiment in terms of it sometimes feels like there's like one word that's missing, and what is this word that they're looking for that will suddenly make a particular part work? But ultimately, it is a process that is making things better and clearer, and I think the whole process of what we're all going through will ultimately make something where you, as the advisor, can fairly compare all these prospectuses and consumer-facing disclosures and effectively get what you need to see when you have your clients what they're asking for and what products are best for them. So whilst it is painful in the birthing process, I do actually think it will be worth it when we get there at the end of it.
David.
Yeah, very, very similar. So we're applying for labels at the moment, and we're in that process. I'd highlight some of the points made. It's very involved, lots of back and forth. I think we've struggled with some of the same things around exactly what needs to be said, but really I think if the end goal is that there's real clarity around the prospectus, around what it means for the advisor or the end client, that has to be a good thing. So we are in that process at the moment, and it's ongoing.
Thank you. I'm going to jump in and say one thing to hopefully Seb will then pick up on. The process is people talk to the FCA, and the FCA is having back and forth, and then you apply properly, and your regular regulatory people basically give you the steer as to what you can change in your prospectus to move forward, so that you're then able to use the label rather than it being approving the label per se. I've written the BSI, so the British Standard fund label, which isn't live yet, but right the way through that, and bearing in mind I was advising FCA on this stuff, so I thought I knew what they were doing. I said all the detail of how a fund works should sit in basically policy information that sits separate from the legal process, because that's something that the sustainability teams are best off writing. You don't want lawyers writing that for you. So our fund standard is meant to be coming out at the end of the year, and it's going to be a bit different from what the actual process is. So I'm not sure if I've got to change that or not. So my interpretation of how it's all working is not what I expected, or indeed what the fund standard will tell you best practice is as it stands at the moment. But Seb, maybe you'd start by talking a little bit about your prospectus as well, and how the length of it, to give a flavour. Include that in your comments, please.
Sure. So in the prospectus, which is available on our website if you'd like to have a look at it, the key section is Annex 1, And that was 1 page when we started the process, and it was 15 by the time we'd finished. So, you know, a lot bigger, but this is in the context of a document that is already 170 pages long. So, you know, I was at the UK SIF conference yesterday, and there's discussion about, you know, how accessible, digestible is that document for end investors. Well, it was never very accessible, frankly, and it probably is a little bit less accessible now, but there is, of course, a 2-page consumer-facing disclosure, which we hope is very accessible. So, so the prospectus has got a bit longer. I mean, to that last point that you were making, actually, we wrote that at WHEB. We had lawyers who reviewed it, but we wrote it, and so I think, in fact, we've had some feedback that actually it's written in kind of in human as opposed to in legal. So it is, I think, you know, relatively kind of understandable in a way that perhaps some legal documents aren't. So maybe that was helpful because you know, we owned it and we wrote it, and then we had the lawyers who kind of crossed the T's and dotted the I's rather than the other way around. So in terms of kind of how we did it, I mean, I think there are some things that are unique, well, not unique, but unusual with WHEB in that we're a very small business. We have really one strategy. We were going for one fund. The policy statement was published in November, at the end of November last year. We said in December, a week later, that we were going for the sustainability impact label. We were absolutely clear that that's what we had to do. Our strap line is the impact to people, so we really had no choice. So, you know, there's a clarity around our objective and, you know, a relatively small team that could work quite quickly and nimbly, respond very quickly to the FCA. We don't have lots of committees. So that was all kind of to our advantage that maybe, you know, others on the panel don't have quite a simple approach in terms of their own structures. It was a lot of work. You know, I did get a summer holiday. I think we all got summer holidays, but they were all interrupted. You know, we had conference calls to kind of respond. You know, the FCA does have this habit, it seems. Others have had this experience as well, where you put in the application and you don't hear anything for 3 weeks, and then literally on the Friday before the application runs out, you get 17 questions, and they kind of want you to answer as quickly as you can, which is not great.
Can you give an idea of timing? Because that's a few days, isn't it?
Sorry?
Can you give an idea, let's say quickly as you can, what kind of deadline?
Well, at most a few days, in some cases a few hours. So it's really not, you know, it's not great. It doesn't make it an easy process.
Sorry for teasing that out of you, but I've heard that too, and it's not.
And also just, you know, kind of does feel unnecessarily cryptic. You know, this thing about, you know, that's really good, but you're missing something. Okay, well, what is it that, you know, they won't say? And then even the final birth, as you put it, Caroline, is kind of, it's an absence of questions. That's what you get. The final thing is, we have no more questions. And that's the moment of celebration. It feels sort of anticlimactic in a way. You know, you want something a bit more positive than no more questions. But we did obviously celebrate when we got that email. I think just a few other things. I mean, others have said, you know, that I think one of the reasons that we were able to move quite quickly is we've always been quite focused. We've been very focused on impact. We had, you know, our process hasn't changed. Those foundations were always there. We didn't have to make any significant or, you know, even minor changes to the process. So we were always in quite a good place, I think, with the FCA. It was more just around articulating it in the way that they wanted it to be articulated, so that they could see how it met the requirements of the impact label. I mean, I'm sure, you know, other people on the panel have done that work as well. So, you know, in a way, I feel quite confident that I mean, even yesterday we only thought there were 4 funds. I don't know how closely everyone is following this. You know, 3, okay, 4. The Jupiter Ecology Fund's got labeled. Great, that's the 4th one. And then yesterday we heard actually there are 10 funds, or 6 funds who perhaps haven't announced it publicly yet. But I'm pretty confident that that where you have robust processes that have been in place for many years, people who really know what they're doing, you know, that we will see more of these funds come through in the next few weeks and months. So, yeah, I think I'm quite optimistic, really.
Thank you, and I hope you're getting a flavour here of the tightrope I feel like I'm walking. I want to help the FCA and I want to help the fund managers, and it's a way of, you know, you can navigate your way through. And Seb and the WHEB crew have done that, which is fab. The other three, I'm sure you'll be through soon, whatever. But let's talk for a moment then, if we can, about things that have changed recently. Like fund managers have been given a little bit of extra flexibility. So if you've got sustainable in the name of your fund now, you don't have to stop calling it that by the 2nd of December. You've now got until April to get through the labelling process, so the naming. Can I ask you, David, maybe to start, if you could, on sort of how useful you think that is, and your views on that generally, please? Yeah,
absolutely. So we're in that process for some of our funds that we'll have the extension or the forbearance. Or, I think it's very, very helpful. I think it's something said there, very similar experience, where we want to give comprehensive, thought-out answers, and sometimes the timescales are more limited. So having that extra time, because it's an obvious point, but the end outcome everyone wants is the best outcome for clients, and not to be rushed, not to be, not thought through, and having that extension is very, very helpful for us. So we're in that process, and I think it can only be a good thing. And Julie, you said before that this is the transition stage, and it has that feeling. So maybe into next year, it will kind of settle down, and what Seb's been through in WHEB, the rest of us will start to benefit from as well.
And of course, we've had the announcement, which actually I hadn't picked up on until yesterday, half of it, because I'm not reading enough at the moment, thanks to organising this. We're having a bit of a delay on the portfolio stuff. They're not going to push that through for December. That's got an extra 6 months, so Q1, Q2, 2025. They're looking at that now, and also the offshore regime stuff won't be sorted out by the end of the year either. So that's being pushed back. And honestly, those things to me are just victories for common sense. And the FCA is listening. People have said this is too rushed, and okay, they kept us guessing for a little longer than I would have liked, because I live and breathe this every day. But they've obviously got lots of processes to go through. So I think these are examples of the FCA listening, and I absolutely welcome that. But so on the delay, Caroline, perhaps you could tell us if that affects you and how welcome that is for you.
Obviously, it's a welcome development, but honestly, from our point of view, being called Climate Assets Balance Fund and Climate Assets Growth Fund, this additional flexibility only applies to funds that have sustainability or impact in the name. So we're in the position that were we not to get the label by the 2nd of December, we don't fall into this additional flexibility. However, we will, if that were to happen, we would fall into naming and marketing rules, comply with naming and marketing, and keep going with all the questions until the birthing process is complete and the label is achieved. But perhaps just a sort of message, I guess, for advisors, there could be funds. Hopefully we will secure it before that date, but were we not to, or others like us not to, there could be this quite weird window of weeks or whatever where one might have to be producing one set of disclosures only to sort of tear them up and replace them with another. So personally, I wish the additional flexibility had been a little bit broader in its scope and applied to a few more terms, but it is what it is, and we will do what we're told to do.
Thank you.
Yeah, we have a similar situation in our business, where we have a retirement range, Future Legacy, which also doesn't have any of this terminology in the name, but it's investing underneath into our sustainability named products. So obviously that adds a level of complexity. I think as well for our organization, which is a bit more complex maybe than some others in the market, where we are a multi-boutique model, obviously with BNY investments on top of us, the internal governance becomes quite time-consuming and a little bit more complicated. So whilst the extension was very much welcomed, it does mean that we still need to be ready in January, really, for all of this. So not every firm is obviously not the same. But overall, and the last thing I'd say is that there was a period where we didn't know we were going to get the extension, and what happens, I think, in a lot of firms is that you have to have a plan B ready. Mm-hmm. So you're kind of working in parallel with, well, if this doesn't happen, then we need to be ready to do this, and there's lots of people involved, and you're almost running two projects at the same time.
Yeah, which was worrying me, and obviously the cost implications of that were worrying me. So I would have liked the FCA to announce it earlier, but I'm glad that they did. So I think that's all good. Is there anything anyone else wants to add in that you might have missed on the process and sort of getting there so far, or are we happy to look forwards now? Look forward? If anyone wants to jump in, please do. Okay, so the next bit I want to talk about just a little bit is, what does all this mean? What does this mean for the market? Looking out there, how's it going to go? For intermediaries in particular, obviously focusing on people in the room, and also for our clients, because guess what? It's their money. David, you're nodding. I suspect you've got a lot to say on this.
Yeah, so through this process, we've spoken to a lot of our clients, and they've spoken to the ultimate end client. And I think in the short term, it has to be about education, and it has to be about, I think back to the slides James put up. There's still confusion in this industry. There's a lot of intentionality about wanting to invest sustainably, but communication, education is the piece that is still probably missing. So I think this process should help that. That's probably the short term. In the long run, I see it as a very good thing, as others do. I think everyone here does. And you can't rush that, because if it's rushed, this is a key opportunity and a key moment to get it right. If it's not right, then I think it will have implications.
I'd absolutely agree. I think, in a way, I think this is, this is putting in place the foundations that we need for the next leg of growth, really, in our industry. I think, I think it was clearly needed. I mean, the industry we have as a group been quite loose with our language, I think, and. I think it's quite right that the FCA is now requiring that to be tightened up. Present company accepted there were products on the market that frankly shouldn't have been using the word sustainable. Absolutely. Or sustainability, and I think it was absolutely needed. I think the fact that we now have formal recognition of the 3 or 4 different types of strategy is really important as well. Previously it was just this sort of blancmange of this language, and people could use it in whatever they wanted. Now we have very clear categories that are meeting very different kinds of objectives, and I think that's absolutely required for the market to mature and grow. I do think, in a way, perhaps this is a bit unfair given the angst that everyone is experiencing in the short term, but I don't think we're going to be thinking about the 6-month postponement in 12 months. I think that will be forgotten because we'd have moved on. And the mark, we'll have got the labels and we'll have moved on to the next phase. I'm pretty optimistic. I think we're in a good place, even though it's been painful. I think we're past peak pain now.
I certainly hope so.
Yeah.
Certainly hope so. I think so too, and I think people have recognised that the FCA is listening. That's, they're not getting everything they want, but there is a dialogue, and I've certainly been doing what I can to all the cogs behind the scenes as much as possible and get people talking. And I hope you're right there, Seb. Caroline, please.
So I think for the next 6 months, the advisor is going to be in quite a tricky position if there aren't going to be a huge universe of funds. And obviously, you've got to put your clients' money in the right direction. In that sense, I feel sorry for you. But I also just think one has to, like you said, just think beyond that immediate sort of short term. This is a wonderful thing for the sort of maturing of this market. That flood of new entrants that came in sort of 2020, 2021, when funds were sort of rebranded and people came into the market who really shouldn't have been there. And you have to know that you are investing in a credible, trustworthy, it's got all the disclosures you need, it does what it says on its tin, we've got these 4 labels, everything everyone else has said. I think that's a wonderful thing for the market. And with clients in mind again, you've got the great wealth transfer, you've got so many more potential conversations like this happening in family situations where potentially the younger generations are going to be proactively asking you more and more questions, and you now have potentially the labels to back up the investment choices you make for them.
Thank you. Can I just check, because we'll go to questions in a minute, can I just check that we've actually got mics around in the room? Just maybe see. Yeah, cool. Therese, please.
Yeah, I was just going to add, I don't think we'll see necessarily the big bang that we saw in Europe under SFDR, where there was this big rush towards Article 8 product focus, for example, and that's probably a good thing. I mean, obviously the outcome would be very good if overall a lot of these great sustainability funds that exist in the UK market does get a label and doesn't get sort of pushed into this sort of other layer of non-label but disclosed space, because there's a risk then that we'll end up with a slightly confused big space that might add more confusion that it's helping. So I'm hoping that's the outcome, and if it does, then I'm sure there will be a natural maturing in the UK around how we roll these funds out.
I hope so, and as you've said, trust has got to be a massive thing here, and make no mistake, the whole investment community has to change what we do. We have to take sustainability a lot more seriously in order to address things like climate change. But if we can't trust those funds that are meant to be the leaders, then our reputation is destroyed. So that's why I was fighting for SDR and wanting it and helping shape it. I think that's really important. So thank you for pulling out these facts. Can I just ask you, before we go to questions in a moment, can I just ask if there's any key points that any of you would like to say for intermediaries? Anything, maybe change relationship with the FCA or anything else like that? Key things that if you are a wealth manager or you're sitting down, you're someone who talks to clients, what are the key messages that you'd want people then to take away about SDR and about what we've been talking about here? David, perhaps you'd like to start?
I think on the FCA question, I think it can only be a good thing that we're working closely with them anyway, but through this process and probably the mutual understanding with intermediaries and the underlying client, this has to be a good thing. It's been said a lot of times already, but just really the clarity of the labelling. I think it is, you hear a lot that maturing of the industry, and we are going through that. And Seb made the point that a lot of things happened probably a few years ago with the flood of capital. This is a cleansing of that, I think. Yeah. And we'll get through this process, and really this needs to be done right. But I think you have to stick with it, but we'll get there.
Brilliant, thank you.
Yeah, I mean, I guess the kind of elephant in the room a bit is the MPS and what happens to the next level down. I mean, it's not clear at all yet. So although it feels like we have the light at the end of the tunnel for the product manufacturers, as it were, it may feel like you're just going into the tunnel for the MPS providers. But I think now, once these foundations are clearer, hopefully that whole process will move forward. But I can see why it's perhaps not the tone is still quite bleak, I think, for a lot of for clients, because they still don't quite know what it's going to look like for them.
No, and I think that talks to the point of we are in the thick of it right now, and there's teething stuff going on, and we're all feeling our way a bit, whether you're a regulator, an IFA, or a fund manager. It's kind of work in progress. Thank you.
So these labels are a lot of work, and there is a lot that goes into it. So once they're out there and they exist, please use them, because that, in a sense, it makes it all worthwhile, but it also will strengthen the whole industry.
Yeah, and so some of the information I gave the FCA ages ago was user stats from our Fund Eco Market database, and by far the most frequently used stuff was our SRI styles. So we knew that labels, people wanted them, and we use labels for food and all sorts of other things. So it just made sense to do it here, and their consumer research was really unambiguous. So a lot of the things people are questioning the FCA for at the moment, they've got the research on this. They've got it sussed. The implementation perhaps a little bit less so, but please carry on.
Maybe the only thing I'd add is the importance of still engaging with the fund manager. I mean, the label will give a lot of information, but there will still be a lot of nuances within sort of a focus label, etc. So spending time with the asset manager, with the investment house, to really understand their thinking, their philosophy, and how they operate internally is an important complement.
100%. Thank you, vital. And that's largely what the next panel session is on, or that's the second half of the next panel session. I think that's absolutely right. Can I, unless there's anything anyone would like to add, can I open for questions now, please? The lady, or someone in the back there, I can see a hand with a white sleeve.
Good morning, everyone. I just wanted to ask the panel, of course, Seb, WHEB has already got the label now, but what do you wish, going through the process, the FCA would change or would fine-tune to make sure that it's easier for people to get the label. It's more straightforward. It's not as tedious as it's looking like it is at the moment.
Would anyone like to say that? Sorry, yeah.
I mean, I think there has been a lot of learning on both sides. You know, we were talking. I was talking to someone yesterday about, just to give one example. Relatively early on in the process, this might be a bit technical, but the FCA was looking. When you talked about your engagement, it seemed at least like the FCA was requiring you to show causality in outcomes associated with your engagement. So, you know, we've engaged with this company, they've developed a net zero carbon target as we've asked them to do. WHEB is going to claim that it happened because of us. Now, honestly, I think that may happen, but very, very occasionally. And to set that as the standard is kind of ridiculous. So there was a process, I think, by which the FCA has come to realize that really, in fact, it's explicit because they've given up on this indicator of engagement effectiveness. But at the start, it felt like it looked like that's what they were asking for. By the end, it was clearly not the standard that they were looking for. So I do think there's been a lot of learning, and I think those of us who've gone through this process from the start have kind of borne that painful element to it. But maybe that's the price you pay for, being a leader. And I think the FCA has learnt from that, and it should be easier for others because those sort of things have been realised.
Thank you. Chris.
Thanks. Interesting debate. I'm interested in the relationship between the fund labelling and the model portfolio service management labelling. So, is that the reason why we're delaying our side?
Yeah, so
waiting for you guys to get labelled?
Shall I kick off answering this one? So my recommendation, comments, etc., to them have been around you shouldn't have MPSs or other portfolios labelling their portfolios, whichever label they go for, if the underlying assets, the people who actually are doing the stock selection, the asset selection, haven't managed to achieve a label. Because then you've got people who are typically smaller teams basically imposing their view on the larger teams who haven't managed it and maybe themselves don't think it's right for them. That's just storing up a mis-selling scandal for the future, to my mind, which is why I'm glad that the FCA stepped back and paused and holding off on that one. I should probably stop talking. I'm meant to be chairing. Any other thoughts on that? So the MPS bit absolutely needed delaying. Does that answer your question, Chris? Is that enough? Does anyone want to add anything? Are you happy adding more about the dynamic of MPSs, or maybe pick up that one in coffee if there's something specific that you've got in mind for, because there might be something, yeah. Can we go to Jill, please, for the next question?
Yeah, I just think something to add on the MPS is my experience. They're all a bit of a mixed bag, doing a bit of ethical screening, a bit of responsible forward investing, a bit of impact as a sort of a satellite theme. So I think it's probably going to be a question for the FCA as to whether MPS will have a percentage label.
So we've put that on Fund Eco Market, by the way.
Good.
Percentage outside of the objectives, because some people are looking at it saying 70%, why on earth would we go down to 70%? And others like, well, 70%, well, it's going to be tough. So we need to know. So we put it in bands of 10%, and we're asking fund managers for that information.
But that's interesting. Make sure I've understood. So you think that the percentage label might be, 20% impact, 15% focus, 30% improvers, whatever the rest is unlabeled.
I'm missing that. Yeah, I should add that as well.
Something along those lines, Seb, because I won't mention the houses, but recommending model portfolios for my clients, they are trying to do 3 things all at once in the one MPS.
And that puts you in a difficult position explaining it to clients, doesn't it? But we will get through it. We'll work out a language around it. But, yeah.
I think sometimes it might be like the cherry on the cake, you know, like the little bit of impact on top of the responsible, on top of the negative screening. I think that's how a lot of MPS is going forward in this space.
I think so. Can we come to Robin, please, for the next question? Thank you, Jill.
Thank you. Just firstly, congratulations and appreciation to WHEB for the work on being one of the very early label acquirers. And, you know, we can't make things like this work unless there are teams that sort of go through the horrible stuff and sort of break through the new ground. So brilliant on that. I had a general question which was really around, so far the applications seem to be by sort of actively managed funds. Is this something that passive funds might get to? Is there any sign that passive funds are making applications? Any idea?
I don't think...
Active
You
management.
know what, I can check up on Fund Eco Market. We might have some information on that because we've got, I think it was 73 last time I looked, funds who'd admitted to us that yes, they were putting in for the labels, and I haven't checked that. We can do. I think we're going to wrap up there. Unless there's any burning questions, let's wrap up and grab coffee. So if I can ask you please to all thank the panel in the usual way.